I'm delighted to be joined today with Santiago R Santos from ParaFi. Thanks so much for joining us today.
Lisa, thank you so much for having me on the show.
So ParaFi was founded in 2018 when DeFi was at its most nascent. How did you come together and get involved with this? And, did you expect all this growth to happen?
Great question. I think Ben, my partner Ben and I, we both come from traditional finance. And so, we've been investing in crypto since 2013. And if you look over the course of that period, what's really where I think the product market fit of crypto has largely been is around transfer of the value, storage of value, medium of exchange. And so for us, naturally, we look at DeFi as a continuation of that. And so certainly DeFi has picked up over the last year and a half in earnest, largely built on Ethereum. But I think there's been a lot of groundwork built over the last 10 years of infrastructure. And I think we're hitting an inflection point that is getting very, very interesting, where a lot of projects have been building and it's gotten to a point where things are ready for prime time. I think people, consumers especially, or market makers or participants in this ecosystem are really starting to see the result of what's been oftentimes has felt like an arduous process to get here, right? Nothing is very linear. I think now things are starting to pick up quite a bit, but it's been a long time in the making. And so ParaFi really was started on that basis. My partner Ben was at KKR. He was looking at blockchains from that perspective. He was doing distressed credit trading. I was at more of a venture fund called ParaFi Capital, which is a lot of the partners at KKR. And so I was investing in open source tech and fintech. And so really I think the thesis of ParaFi is really seeing the convergence of what we think is, the power of blockchains and open source, plus really revamping financial infrastructure, which when you think about it, the financial system hasn't really been modernized over the last 20 years. And so I think now blockchains uniquely enable that. And so that's what we're really investing behind.
Yeah, so you have the same venture background that I do. And a lot of what we talk about is risk, right? So Vitalik Buterin said this week that he thinks a lot of people are underestimating smart contract risk. Do you think he's right?
I mean, certainly, the Lindy effect, this notion that the longer things exist, the stronger they become in cryptography. I think, look, DeFi is a year old or a year and a half old. Some of these protocols haven't been truly battle tested, but I'll offer a couple of metrics. One, total value locked. I mean, I think value in these systems keeps growing, and I think that is a good sign. Just yesterday, there was another hack of Open, which is an options protocol. Things are moving fast. Some will break invariably. One of the companies that we're investors in is Nexus Mutual, which allows you to actually buy cover on smart contract. And so, I think risk management in this space, there's a huge opportunity for people to come in here, develop more robust options platforms, credit default swaps, and then just continue to expand Nexus to continue to grow. I think it's just getting started, but certainly, I mean, to Vitalik's point, I wouldn't necessarily disagree. I think these protocols are still rather young and haven't been truly battle tested, but there's been a lot of focus in the community to do security audits, have bounty programs, which over time will give more confidence that these systems are battle tested. But there's a lot of risk, right?
Right.
I wouldn't say that there isn't.
What makes some safer than others, and have there been improvements since Black Thursday?
Yes, I mean, generally at the smart contract layer, I think we've looked to at least invest in the most competent technical teams that really understand the different standards. When you look at some of the vulnerabilities in certain protocols like BZX or DForce, I think in China, DForce in particular, I mean, there was a very well-known vulnerability in ERC, I think 721 standard when you're using it in an AMM. Not to get too technical, but I think that was just an oversight of the team that could have been corrected had they sort of really understood the vulnerability in the standard. So I think all of this to say is I think that the competent teams recognize that it's important to do audits, not one, maybe two, continuously do audits and have a bounty program to incentivize white hackers like Samsung to go in there and try to battle test the system, and also do a methodical rollout of the protocol, right? It's not like software world where you launch your MVP, move fast, break things, does not work in DeFi. You have to be slow, you have to be systematic, you have to contain the risk. And so I think almost the smart teams recognize that you want to launch in a very systematic way. Like your beta should be contained, there should be low, small dollars at work, and then over time, kind of roll it out, right, in a systematic way, as opposed to some teams that just are like, look, we want to capture the market, we want to be aggressive at the expense of potentially being hacked and then consumers losing their capital. So
right. And even with liquidity pools locking, you could even see the scenario where a DEX might shut down, right? And that hasn't happened yet. That hasn't been stress tested yet.
Definitely. Yeah. Word of caution. I mean, anything that promises and looks too good to be true needs to be looked at with a lot of scrutiny.
Yeah.
But we're getting there. I think a broad statement that everything is super risky in DeFi, I'll counter back by saying, unlike the traditional financial system, everything is open, everything is transparent. And so you can actually monitor on-chain activity. You can see the total number of funds locked, where they're coming from, flow of funds.
Right.
That is a great opportunity to price risk in a way better way that you could in traditional finance.
Right.
I mean, go back to 2008. You had exotic derivatives, off balance sheet items that
right.
there was no way to pricing these things, but now you do. And and I think let's take that and use it and price risk accordingly, right? And so I think that's a huge opportunity that we're looking for teams that are like Nexus that are leveraging that.
Yeah. But it's a little difficult to explain it to, you're spinning out a pure fund in this sector. How do you explain that to people that don't really understand the sector at all, right? What kind of, LPs do you have?
Great question. Yeah, look, we've been having conversations with some of the largest asset managers and pension funds, university endowments, and the likes that are crypto curious and have been for the last couple of years.
Right.
And when they ask us about DeFi, really our response back to them is, think of this as the next arc of innovation of fintech. Forget for a second about crypto. Forget for a second about blockchain. Know that fintech is moving in this direction. Why? Because it's a secular trend. Like if you look at the internet, there was a time where we refer to businesses as internet and non-internet.
Right.
Now every business touches the internet because it's great technology, transformational technology gets adopted. It's too hard to ignore, becomes an operating standard. The same way that the internet has permeated every aspect of our life, commercial, business, non-business, personal lives. In the same manner, I think we're not far from a state of the world where people are interacting with DeFi applications without even knowing it. And I think that's the beauty of powerful technology. No one cares about crypto. No one cares about blockchain. At least that's our pragmatic approach to investing in this space. People care about the bottom line. And I think that's how we convey the opportunity in DeFi. It's very early still. The financial system has been stitched together and cobbled together in a way that, has somehow worked, but there's a huge opportunity to be a step function improvement. And I think the nice thing about finance is the ROI is very clear. A trader understands slippage. He understands liquidity. Right. And we're seeing an influx of centralized, what we call CFI, so centralized finance in the crypto sphere, entering DeFi because they can make more money. They can be more capital efficient. And that, I think, we're just seeing the early signs and indications of traditional finance entering DeFi.
What do you think about these various forms of collateral everybody's looking for? What about real world assets potentially as collateral? Thoughts?
Oh, certainly. I mean, that is sort of a holy grail. You have a couple of projects like trying to bridge real world assets into DeFi, into digital sphere, like Atoms, Meet, Bits. We're excited about that. I mean, it's a huge market. A company like a protocol called Centrifuge is trying to do this, where they're collecting invoices from high quality, corporate issuers and putting the accounts receivable on the blockchain, and a hedge fund or a counterparty can go in there and buy cents on the dollar and take the counterparty risk. it's going to get very interesting, I think. Collateralizing things other than crypto collateral. What is quite interesting is the price discovery of how you price these sort of illiquid assets, right? If you look at the beauty of AMMs is that you have good price discovery on things that otherwise were quite hard to have good price discovery on. So now you can tokenize X or Y, and that creates a market on some of these illiquid assets and opens up the market opportunity.
Right, and then you have the price discovery through the aggregators in layer 2 as well.
Exactly. Yeah.
So what are the best ways to incentivize liquidity? You have Uniswap as an automated market maker. You have zero knowledge proofs to reduce gas fees for market makers. Like, what should we be doing?
From an incentives perspective, I feel, well, certainly you have what we've entered into an agricultural revolution of sorts that we call, liquidity mining and farming. We view that as a great customer acquisition strategy for these protocols. You look at what Compound has done, Synthetics has done, Balancer, and UMA, and I think most projects are shifting that direction of incentivizing the core users of the protocol, whether it be supplying assets for lending and borrowing, or borrowing in the protocol and rewarding them with a native token. In many ways, it's no different in my mind than a startup granting equity to employees or key people. But you've never had this paradigm. It's like, think of Uber, right? In a state of the world where Uber could do this, I think they would issue equity not only to employees, not only to investors, but also to drivers and to passengers. And I think that's sort of the analogy that's happening here with these incentive programs. If you were to zoom out, the key innovation of blockchains, I think, full stop, is the token itself, because you have never had a more powerful coordination and incentives mechanism. Full stop. And I think whatever your KPI is, whether it's increasing loan and borrowing activity in your protocol, if you're Aave or Compound, trading activity, it becomes the way to bootstrap these networks is just the cost to bootstrap them has gone dramatically down, because you're rewarding everyone in the ecosystem. And I think that is the beauty of blockchains. That is the beauty of tokens, that somehow the narrative around tokens got lost in 2017 around scams and ICOs. But the true novelty is, at the end of the day, we are it's the best coordination and incentives mechanism.
How do we bring in more retail, or are you concerned about regulation with retail investors in this space? How do we democratize it more, that it's not, a house of whales here?
No, it's a great question. It's something we think about a lot, regulation and protecting consumers. I think we're still sort of in the experimentation phase where things can still break, to your point on risks. So it's important to, be very projects and us really just, it's on us to kind of protect and use a buyer beware kind of thing. But there's another element of power is, I think crypto generally is a retail phenomenon. A lot of people talk about institutions getting in the fold, but it hasn't. I think will continue to be a retail phenomenon. And that's a paradigm shift. Anyone can be a market maker. Anyone can be a liquidity provider on Uniswap with any amount of funds, right? You don't need to be a large trader. You don't need to be a large hedge fund. You can get a nice yield and be a market maker on any amount. And that, I think, collapses the barriers to entry. You can run arbitrage strategies using flash loans with Aave. I mean, you've just never had that environment, because this notion, it takes money to make money. It takes a large balance sheet to really play with the big boys and the whales. I think that is true in traditional finance. You need a prime brokerage account, and you need to be ultra high net worth to get access to derivatives and products that, offer better investment returns, more protection in some ways. So, don't get me wrong. I think there's a lot of education that needs to happen. Not everyone should be buying and levering up 10x or doing yield farming or buying derivatives or options. Certainly not. But I do think that in another state, the fact that you can do that is quite powerful, because there are very smart retail investors that I think it's a misnomer to call it retail. It's just, are you sophisticated or are you not sophisticated? There are large institutions that are not sophisticated. There are retail investors that are very sophisticated.
Right.
So it goes back to this, like, definitionally
of accredited investors. Yeah.
That's exactly right. Like the fact that you've made like $1 million or like have earned over 250K or per year,
right,
is a very antiquated construct to determine if people are knowledgeable, sophisticated. Let's better instead ask them questions. Hey, do you understand how a put option works, call option works? Do you understand liquidation? Do you understand that your collateral? Those are the things that need to be perhaps more emphasis on the educational side, as opposed to having these very rigid definitions that
absolutely
candidly just don't work. Yeah.
Well, great. Thanks so much for joining us today, and we look forward to future conversations.
Yeah, no, Lisa, thanks so much. I really enjoyed this discussion, and if people want to learn more about us, they can reach us. We're typically on Twitter or reach us out at ParaFi Capital, and we'd love to talk to you.